The current quarter, the one that we're going to get guidance for, generally not a huge quarter for Apple, but does this coronavirus issue turn more attention and possibly significance to guidance than normal?
Well, I think it could, and you're right that this is typically the next couple quarters are the weak part of the year. Investors start to gear up for the 5G introduction toward the end of the year, but the coronavirus definitely throws a fly into the ointment. And, Tim Cook's pretty good about calming people down, so we'll see what he has to say, but I would think there's potentially a problem here. First of all, about 20% of what Apple sells is in China, and a fair amount is sold during Chinese New Year. Now, hopefully that would be temporary and demand would come back. But as you've been talking about, the supply chain could be an issue, and I believe Apple has some very large plants, 2 to 3 hours by high-speed train from where the problems are in China. So I doubt he's going to make any strong pronouncements, but I would think that there's some risk.
So given that the iPhone is still the biggest contributor to revenue and earnings, what should investors be looking at here? I mean, wearables could have had easily a $10 billion plus holiday quarter. Is that important? How important is services performance?
Yeah, the story really over the last 6 to 12 months has been the non-iPhone business. So, iPhone has been declining. Now it's flattening out. But that means that the wearables can start to add 3 or 4 points of total revenue growth. Services will probably grow about 20%. People might want to hear an update on Apple TV Plus, but generally seems to be going pretty well. So I think what's helped the stock over the last year is the fact that people feel like the company's a bit more diversified, and the worst seems to be over in terms of the iPhone decline.
Steve, it's not the most important thing going into tonight's conference call, but the president has seemed to suggest that there's a bit of like the company owes him for the waivers on tariffs as it pertains to the privacy of these iPhones regarding this case in Florida. I mean, how much would that hurt if, in fact, some of these waivers fell off?
Well, it would be a negative. Cook's been pretty smart in terms of getting to know Trump, where a lot of the tech CEOs have kind of stayed away. He's gotten in there right away. He sort of convinced them, hey, look, if you put tariffs on us, Samsung is going to sell more phones. So, there's no doubt that I think Apple would have to raise prices, and that would have some negative impact on demand. Doesn't look like that's going to happen. Then you've got the separate issue of sort of opening the phones. I don't think investors are going to get too excited about that. What's interesting is the fact that the earnings estimates for fiscal 20 are about the same as they were a year ago. So PE expansion pretty much completely explains the stock's increase. And, it's now sitting 25% above its 200-day moving average. So I'd be a little concerned about a correction, but I never expected the stock would get here either.
That's what I was going to ask. I mean, its market cap is sitting right near $1.4 trillion right now, near all-time highs. And we're talking about all of these potential issues. How perfect does this quarter have to be? How reassuring does Tim Cook have to be about guidance for the stock to stay here and possibly move higher?
Yeah, I think the December quarter, the reporting will be fine. I think he can't sound too scary on the outlook, which he probably won't. I think it's a bit early to have any conclusions in terms of what's going to happen with the virus. But I would say that the way things are going, I'd be concerned. I doubt there's a company in the U.S. that sends more people back and forth to China than Apple does. So I would say, at least in the near term, it's a risk for the stock.